Good people, Crypto Sniper here, and just checking in with you on Bitcoin and the crypto realm generally. What's to come next? We had a great Christmas run. Yes, indeed. Congratulations to all those part of that. Well done. Hope you had a good Christmas break. I'm here to tell you there might be some more good news. Yep. Had you been with us in the community, you would have been checking out this structure here, the squeezy Japanesey in orange. Yes, indeed, the rising sun. And there it was. In fact, we were looking at it. We were tossing and turning. Generally, our bias is bull. So the macro here is Bitcoin is in a expanding bull. But it has also just recently made our big pause level. Interestingly enough, once it finished its overperformance, it came down and sat on our final target level right there. You may recall we talked about 25,700. So having broken it and done a little bit of respect to it, a small, not a great deal to be frank, small little dip, it had a little bit of a blow off action. Then it came down, sell, got a little bit of a flat bottom structure that was invariably going to have some degree of down leg in it, and you could argue descending triangle even. And down you came, and next thing you knew, you were bouncing on support on our key level of significance, the 25,700. But largely, apart from that, you've been above this. So the interesting facts that also come into play here are a couple of key round numbers. So like anything, especially when there's commodities and you've got the control structure involved with the futures, etc., strikes and option prices, round numbers play a very relevant part. There's also other reasons you can have key levels of significance. You can learn about what we include in key levels of significance, and it's quite a broad church. But round numbers are one of the most prolific ones. It's known as pegging when you get a lot of price behavior interaction on a round number, because some people with derivatives are just coming into money or just going out of money depending on that round number, because call and strikes in derivatives are always round numbers. They're not going to be a crazy number. Yep. So what else do we have for you in terms of analysis? There was also a 27K level that was kind of quite key here. That ran through there, and I'm going to talk. See this little blue squeezy Japanesey? We'll talk about him as well. And that perfectly pivoted around the 27K mark. Once it had decided it was going to break this high. So once you got the new high, initially you got a reaction, pullback, then you squeezed, and then that's what generated your breakout momentum. Our first pause area was here, and you can see we did in fact get a very keen and simple bull flag continuation that was created from that move. So if you were a traditional technical analyst, and we do respect and play with all the patterns, we just know which ones give us the greatest bite, you would also have noticed that you got in the end a pretty symmetrical move up there. That took you through our second pause area around about the 28.3. And you might see there's a darker purple number that'll take you just sub the 29.4. So we're talking about around about 29.3s. If we're to get the new year gift that we are suppositioning is on the table. So you're going to be taken to the doorstep of 30K. By the way, does that mean you automatically run 30K? That extra $600 can be hard yards. We saw it on the all-time high. You might recall we came up, we stopped just short of the all-time high for a while, and we had a pullback. Then we took the all-time high out, but stopped short of the 20K, and we had a harder sell-off. After that harder sell-off, we then had a rally, and finally we did 20K. That's just how it was. So it was coming up to a lot of previous highs, a lot of key significant points, a lot of support and resistance traders that needed their heads handing to them. So it's typically how it goes. Lots of whiplash at key levels. So in the same way, I'm not going to out and out assume that you're going to trot on for another $600 to the high side. I haven't even got it on here on the scale for you to see. But you might have a 30K run, you might not. But I will go so far as to say you're going to be taken to the doorstep at minimum. Whether you get carried through the door or not depends on your groom and how much he loves you. So that's kind of where I'm prepared to go. So I'd look at 29,350s over here as our next key level, in much the same way as our 25.7s was a really key level. Now, some guys said, you left so much money on the table at 25.7. I read the comments, and it's just people who don't understand that we are in an overperformance macro and we remain bullish. It's just a great point to take off. There's no telling that you would have done this before you did it. And we closed a lot of our leverage. We didn't close any investments. So you've also got to understand the 3 pots rule. You'll learn a lot more about how we talk about that and how you should have your trading. So the first is just investment. You net investment long the whole way, and will be for a lot longer, because we are macro bulls. The question comes when you start to involve leverage and you're trading for a run. You need to have a point to get off, because you don't want to be jumping in long here and eating that. It'll destroy your account. You can't do it. It's just too damaging. So you've got to have a reason for your entry, a place for a stop that is not too far away, but also has some reason why it could be defended. Standing behind the line on the other side of the fence is a good example. And that's what key levels of significance give you, horizontal lines, which is one of the reasons why HVF method emphasizes and makes predominant the price level rather than angled lines. These angled lines are to illustrate squeezes. In other words, the key things for us are volatility compression, which gives you wind-up strength. And you had a secondary one. So you got your wind-up strength, you started your move, you just ran your high here, and then you got a proper boost to say goodbye to your 27K level. That's what you needed. You needed a little tiny wind up the motor, a little turbo, pop it up. So that's kind of what is required. So what else have we got for you? The other key thing is, so folks getting real excited. Polkadot is the shining star of the current moments. Let me just I'll take a picture for you and I'll tweet it out. Whoops, wrong chart. That's the one. So that you can all look at this in the cold light of day on Twitter. Are you following the crypto sniper? Are you following the market sniper on Twitter? Yep, then you will get this chart. I'll send it out and I'll do it. It'll probably be up before the vid is out if you're following. So go have a look and jump on. So we do discuss our trading there a little bit on Freeview. So what should you be doing? Well, if you have no money, go watch a mini series just to get your mindset right and to understand what's involved. Second, what else could you do? You can book a call and find out more about our product deliveries. We have a self-study option, which is more affordable if you just want to learn the theory, and you have the full community with the implementation and regular updates from me. Putting one out for the YouTube channel now. So is this great pattern right now for going up? Not really. Where are we right now? We've run this point, and in fact I'm done with the grey. Transgender pink just matters so much more. There we go. We've run that level and we've had a bit of a stale out. This is actually quite a nasty little sell-off, but it did eventually get a strong rejection there. It came back and retested. It just seems the 27.6 is now your kind of your new floor, which correlates very closely with our primary pause area when you flagged here for the bull flag. Are we going to stay above it? What kind of pattern structure will we do? Well, it remains to be seen, actually. You could get a falling wedge. You could get another like this on a smaller scale, as per our orange draw there, the rising sun of the squeezy Japanesey. But where are we wrong? At what point do we admit we're wrong? I mean, like anything, it's a probability-based game. We bias bull, but it is after a big 2.5 year setup that has now led to its target. We are expecting overperformance, yes, but it could actually do like gold. Initially, it looks like it does a little dip and then it's all done, gold and silver, and you think that's great, it's ready to run again, and then boom, 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 you go in for a much longer pause period. In fact, gold and silver only recently sort of shining up a little bit, only really recently. Theirs was the better part of a 7.75 year pause in the overall bull market. They've been in a bull market for me since the 2000s, when they're as low as $250. So they've got their own story to tell. But this is, in terms of Bitcoin's lifespan, it was 25% of its life, from 17 to 20. It's the existing period of life. So that's quite a long time frame macro setup pattern. And as a result, who knows? We could be wrong. This is a little bit of a marginally higher high point, so we'd like to see the price trade above that. We don't want to leave that isolated high up there and come back down here, because then you start to run thoughts of possibilities of head and shoulders, other various forms of reversal patterns. So it's far from being absolutely clear. The other thing that I want to highlight, as I mentioned, okay, Polkadot this week was doing great. So if we just flip over to the top of the pops, performers of late, and we go coin market cap. I also use Nomics, because I've got a teensy weensy bit of Hex as well, for the game theory element of it. Having spoken to Richard, I'm not pushing anything here, I'm just talking about what we're doing. So Polkadot was the big star, kind of, with 10. Ripple, of course, is on a bit of a rebound after an absolute rout. So what I want to say to you about all of this is what I was also saying to my premium community many times, and a lot sooner, was that this is largely, your best pattern is a Bitcoin pattern, and you should generally be looking at Bitcoin to be your primary star during this period. And generally, it's one of the top percentages. If we're looking at the last 7 days, okay, Polkadot 46, but it also got terribly hit and slowed down and underperformed for an extended period. Then they have a catch-up spike. It's far difficult to predict when that happens. We don't always see idealized structure. Bitcoin is staircasing, climbing. It's usually in the top 1, 2, or 3 of the top 10 in the last 7-day performance. You know, it's there or thereabouts with Ethereum, which is actually flat to down today. It's certainly better than Ripple. It's there or thereabouts with, it's beating Litecoin, it's beating Cash. Polkadot was underperforming for ages and is now having its flash in the pan. Remember, it was Ethereum 7 days ago that was having its flash in the pan, and a couple of weeks before that it was Ripple. Well, you saw how that fizzled on you. You just don't get the same degree of downside volatility on Bitcoin. It's not as thrashy. It staircases its way up, and when it has sell-offs, those sell-offs are more moderated. That points to a bid stack that is building under that. That correlates to the institutional money coming in theory. And as a result, you're getting top 3 performance, sometimes even the best, on any given 7-day analysis. And to get the best of that week, you would have to be rotating and jumping out. Like, you would have to know the future, because some of the structure before, it's just come out of nowhere. You know, would you have jumped from Ripple to Ethereum to Polkadot? What's your odds of jumping from every one? Absolutely perfectly all the time. Trade your best, trade your macro, which was your biggest time frame pattern, and you're still in the overperformance. Most people are going to do best. So this is for leverage trading. In short, we're staying investment long, and that ticks up with the Bitcoin up price, and it will go down when it goes down. The trading should be adding Bitcoin in total. It shouldn't be going up in fiat but losing Bitcoin, otherwise you're destroying value. And most people destroy value without method and without understanding, without sizing and learning to take small losses. Probably the most important thing for being successful in trading is not getting absolutely battered ever. Always ensuring, if you're wrong, you take small losses. If you're wrong a couple of times in a row, you stop doing what you're doing until you've got a new view, or until the market has changed that reflects your view more better. So that is, really important fundamentals. But, you're doing better than Binance, you're doing better than most of them, and most of the time you're better than Cardano. So if I look at most charts, Ethereum is probably the most stable of the alts. So even if we look at Ethereum, Ethereum BTC may be a reversal. And I'm going to throw you on the weekly time frame here. Go 3 days, that's a bit hectic. Take that volume off for a bit. You might be on a deep right shoulder, but it's already a deeper right shoulder to here. Many reversals don't reverse. Or they drag on for a long time. The safest time to actually get back in is not to be too smart. Stay with Bitcoin. At some point, if we go really quickly up here and we return to the 4, that's the 4% of a Bitcoin. We did trade and made this head and shoulder bear target, by the way. I think I mentioned this a couple of times. I don't know if I've did it on a free view, because we spoke about it a lot in the community. It's difficult to keep up because I'm updating the guys a number of times a day, which things I said when. So forgive me if I'm ever inaccurate. But that head and shoulders certainly did make that target in the end and came back to a previous legacy HVF funnel where it bounced and supported. Now, it may follow up in time. So I do expect good things from Ethereum, and I've often spoken positively of it now. I'm just thinking I'm going to stay with the Bitcoin dominance until that's shown. If we get a nice impulsive move away and it looks like we've started the beginning of a bottoming and we're going to return to the 4% level, you'll be looking at 6.6%. So that means whatever Bitcoin does, Ethereum will be doing 50% extra on top of that. So if Bitcoin doubles, Ethereum will go up 3 times. So that'll be an interesting period. But these things can break up. Reversal patterns are not our bread and butter. We draw them, we acknowledge them, and we see when they work and if they're triggering. You saw that head and shoulder work. We can show you that on a shorter time frame. In case I hadn't done previously. You could see that squeeze there. There was a great breakdown to the downside that had us biasing bull Bitcoin for a while. Then out of the blue, spike. Not easy to predict that. There's not much going on here and then just zoom it. Then the flat bottom descending triangle down, you go and you're back spilling. So it was very much a spike and dump and fizzle, which often alts do relative to Bitcoin. Ask Mr. Ripple particularly. It does it against fiat even. So, got to be a bit careful. And for that reason, I just like Bitcoin. Am I a maximalist? Some will go, no. No, I'm interested in what the money and the price behavior shows me. At some point, the potential and the applications and the use and the whole DeFi space, that's going to get more investment interest. Initially, as I say, I think people are looking for stores of value. Biden's coming in. It's going to be UBI for the peasants. It's going to be all sorts of money schemes, dishing it out, doling it out. If he's coming in, some of you will say Trump are calling in the army. Whatever that happens, don't expect that to not have a shocking effect in the market. So yeah, there's just all sorts of unknown risks out there, and people are looking for a safe haven assets that will hold value in an environment. I think it's Michael Saylor says it correctly. If you're losing a couple of percent and the inflation is actually 2 or 3% and you're being paid 0.75 or 1%, you can kind of live with it. You can stack your money there, big institutions. It starts to become a problem when 24% of the dollars in circulation were made available in this last year. That means the money is actually devaluing at 24%. More people are realizing it. More people are boning up on economic theory. And that means you've got to have gone up by 25% to have stood still. Quite a thing, that. Better to have Bitcoin that's going up 100% on average. That's his thesis that he talks about. And I'm inclined to agree. And that's also why the stock markets have been so overperforming, but they're now getting bleed your eyes out overpriced. So you could have a nasty smackdown and slapdown there. It would affect all risk assets, including Bitcoin, if it were to happen, by the way. And I do think it's possible. But I still think it's the best and quickest horse. I also like gold and silver, as you know. But anyway, at some point, Ethereum will start to show relative strength, and we will see it. And then we will pivot. So in short, we're going to wait to start seeing that it happened. You got a bit of a rejection for that floor low. It was right down at 2.2%, which is below its traditional 2.5 kickoff point from the last move that ran to 4% up top here, which saw us bias Ethereum, and it was a very good period for us. So that's it. Get those key themes and surges right with the majors, and you're going to be just fine. I don't think you have to chase the rack all the way down. But as I say, as an experiment, I've got some hex. You guys can all have a pet project and go and play. Do it. But that should be with 5%. 5%, 1 to 5% of what you do if you're trading. You need to get in and out. You need something that's pulling back less hard, and Bitcoin is it. Okay, I think that's pretty much what all I was gonna say today in terms of this. This is potentially going to deliver you to around about here, where's the number 29.3 on this current setup. I'll just drop the time frame back down again and get the 30,000 in there. I think you're going to get up to the doorstep of 29,350, which will possibly have a little bit of, again, overrun on it. The last target we had was 25.7, and we had a reasonable overrun. You went at your highest point right up to 28.4 before coming back down again. And it's held a peg level around 26.5-ish until now. So if you get the same, you could even trade through the 30K level for Bitcoin. And the time frame for this is the good news, is that it's run out of time or is slowing down, and that's a warning sign if it hasn't done it by New Year. So at the cusp of New Year, as it goes on to the 1st. So it's not like you have to wait long to know whether this one is coming around. So with that, biasing Bitcoin bull long, slightly unexcited about this from a bottoming perspective. I think there's a little bit of churn here. It's taking quite a bit of time to digest that slap in the face and rebuild some stamina. And that was quite a rejection candle there as well. So we'll have to see. You could falling wedge down like that. I'm less inclined to feel that, but it's possible. I think you could work your way up and make a secondary high and down and set up another wind up quite similar to that. So that would be like that. And there are other options that I've not included, but that we tend to do a deep dive on. And we update when we're in the premium area. So don't forget to book a call if you'd like to. Listen, it's year end, guys. The game is on. They're coming for us. They're coming for us on every level. I told you they would take your Christmas away. I told you they would take your New Year away. New lockdowns everywhere. I'm seeing. I should do a reset sniper, man. So many new things coming out. So many closures. So many unnecessary things. So many people buying the official narrative that watch the TV. They're coming for you. You keep trading freedoms for security from the bug. We should kill COVID and lose our freedom. We should also stay at home and lose our freedom to save the planet. They've got 101. They've got 99 reasons and bitches to take away your freedoms and reasons for it. Everyone with a heartache story. That's what's coming. You need to build your wealth. You need to buy your own piece of land. You need to have no debt on it. You need to be able to be self-reliant because they are coming for just about everybody. They want to control food. You'll have your one world religion in time. They all synchronized a lot. There's some funky, weird stuff coming down the track that many of you watching this will think I've lost my marbles. I'm afraid you're going to see a whole bunch more. I'll go into it in deeper detail on Reset Sniper. Don't forget the Reset Sniper if you want to find out more about all the agendas that are being perpetuated. But now's the time to build wealth, and crypto is probably the only game that is going to, it's not the only game, stocks will go up, but it's probably the best of the games in an environment where currency is being proliferated and destroyed. You need to maximize and you need to get set and prep. That's the game right now. There's a big 4D chess game going on above your head. and you've got to be smart. You've got to be tax efficient. You've got a lot of things to do, and we look after a number of aspects around that. So as I say, if it feels like the kind of information you want, you can book a call and have a chat. We've also been doing the reset sniper structures for protecting your future crypto gains. Remember, let's just finish on this note, and it's a very important one. It wasn't that long ago. We were calling, is it going to be a first cup gold nugget? People that have been following this channel for more than a few months will know, is it a first cup gold nugget? Are we breaking here? At that point right there, where you started that journey, 9,000, and it confirmed first cup gold nugget when it ran that $10,050. You are today, if we turn out correct, knocking on the door of nearly 30,000. That is 3 times since the confirmation of at the end of July. So it was beginning August-ish. And if you take it when it rolled right back, and it only really, after its little revisit here and sat back, properly started running in 8th of October. Because you were just lumbering along there. You broke, you pulled back, you sat back in the hole, and then you wound up for the final time. I call this the second most important HVF out there, and it was one on Ethereum we got wrong. That was flat bottom, so we don't only get things right, and we own the ones we get wrong, which look really weak. And big mistake, we should have gone with the God market, and it wasn't flat bottom, and it broke to the upside, and that was the beginning of the move. That was the reassertion once it had a break and return move. It first tested the level and came back, and that was in October. So on the 8th of October, man, that was yesterday, damn it. We're the 30th of December. So all of October, all of November, all of December. In 3 months, you have gone from 10 grand to banging on the door of 30 grand. What do you think it's going to be at the end of next year? Do you have any idea of how many quadrillions of derivatives are out there? How many hundreds of billions different asset managers have? How the super big asset managers actually have trillions under management of assets? All looking for a place that's not going to get proliferated away in this UBI, modern monetary theory, print as much as you need, bullshit, Bolshevik communist crap. How many are going to have to find something that supposedly is limited in supply? And how far up do you think it goes with all this funny money that's being created? You could have 2 or 3 Bitcoin, you could have 5 Bitcoin. And that's not mean you're particularly wealthy right now. And you could be sitting November, December, same time next year here, and every one of those is worth 70 grand, 125 grand. What are you going to do with your 5 Bitcoin, assuming you've retained them? You haven't added any new Bitcoin because you didn't do an HVF course. You thought it was too expensive to learn how to turn 5 Bitcoin into 10 Bitcoin over a year. So you kept your 5, and now it's worth 125K per Bitcoin. What are you going to do? What if it's 100? You're worth $500,000. Oh, but that's capital gains in a year. It's too late when the government says, oh, by the way, we saw your KYC, Coinbase gave this to us, etc., etc. You've had a gain. We see you've also closed and opened and bought and sold a couple of times, so you've realized those gains. Here's your tax bill. It works out at the super tax rate because actually last year effectively you've earned capital gains X, and because we think you're a trader more than that, it's going to come at the income tax rate. That means you're a super taxpayer and you pay us 60% of that. That's not the time to think, I need a structure. You're now 5 steps too late. You're done. You're cooked. Your account was in your name. You're stayed in your country, in the UK, and whatever the case may be. And they own you. They own you and they extract from you. And absolutely, the official... This is what Rao certainly gets right in all these talks. For this area to grow, as I expect it will, all the formalized tax extracting, asset compliance, all the shitty investment banky things, and all the officials, the regulations, the SEC, all the rule makers, they're all going to be re-injected into the space they're already there. They just haven't made their presence felt so much yet. That means, it's going to be very legitimized and officialized and all of that. All that frontier spirit of cowboy out in the range with the roaming Indians and the bears, that's gone. You're in urban New York and there's a traffic cop watching you and someone fining you for jaywalking. You're back in control structure land where you've got to behave and do what you're supposed to do and they're entitled to tax you and all of that. That is here. It's too late to think about how much of your newfound wealth, 5 times 125 grand, that would see you on about $625,000 you intend to keep. So that's something else we're doing for our community members, and it's very important. Anyway, enough of that. It's great news to make money. Make sure you don't swap one problem for another problem. Nice problem a tax problem may be. It's still not. It still needs planning in advance. So with that good news, let's see if we turn out right. As I say, it's not about really right and wrong. It's just a feedback mechanism for us. So we say, if you're still strong, you'll go. This was your last one, by the way. You can see it. It went. It did its target as well. And of course, before it, and you could be using leverage and really adding. This has been a great Christmas period for you. So forget what you make on investment here. Imagine you have 4 or 5 times the size with tight money management, and the market moves strongly away from your stops here and you're along there. Just imagine the difference that makes to accelerating your growth. But if you don't know what you're doing, you will hand it all over in the same way. So we'll see. We'll see if it happens. If it doesn't happen, it means it's softening up and it's time to be more defensive. It's a feedback mechanism. Okay, thanks for being great fans of the Crypto Sniper. We appreciate it. Please report all the scammy comments, guys, that puts their commercial and their WhatsApp groups. You don't have to be a member of, you don't have to be the YouTube channel. Just if you see something that's obviously scammy. I like the fact that we keep our comments area clean of all the rip-off artists, and they all come to crypto. So let's stop them from burning somebody. And have a great new year in lockdown season. I told you they're coming for you. Bye for now.